Hi everyone and welcome to episode 4 of HODL. Today we're going to discuss asset performance this year, and we think this is a highly relevant topic because it tells us something on where capital is moving and how investors think and prepare in the market sentiment we see these days. And if we start to look at the asset performance for Bitcoin, silver, gold, S&P, Nasdaq, and copper, we can see that Nasdaq and S&P has actually have delivered great returns this year with 18 and 22%. But what's even more interesting is that silver, gold, and copper has significantly outperformed equities by a huge margin this year. And Bitcoin, unfortunately, are lagging both compared to equities and also gold and silver especially. So Sander, when you look at this chart, what does it tell you about the market we see now?
For me, it's quite clear that we are now entering a world with more geopolitical tension, and central banks, companies, and individual investors and institutions are now starting to allocate to risk-off type of investments and what they believe will be critical assets in the next couple of years. And I think it's also accelerated by the narrative and retail as well. So for me, seeing silver going over 100%, actually close to 170%, and gold 70%, we have seen trillions of market cap expansion into fixed supply or limited supply type of assets that are critical for store of value or industrial assets. So for me, this gives a clear picture that we are now in a more geopolitical tension and investors are seeking safety. And you can also argue that people, and especially central banks, are less confident with the US than what they have been in the previous years.
Yeah, and I also think we can see that if we take out equities and we just compare Bitcoin to the other metals as silver, platinum, copper, aluminium, gold, we see, we can see that all the metals we have here has significantly outperformed Bitcoin. Even aluminium, which in my head is a quite boring asset class, has delivered way higher returns than Bitcoin this year. And what does that tell you about the cycle we are in?
I think most of the capital that are managed by central banks and institutions are managed by people that are at a certain age, and they have a preference of allocating to assets that has a longer history, especially in times when things are looking a little bit darker than what we have seen over the last 20 years. So for me, it's clear that people are more risk averse. They are putting premium to history, and I think it's quite. I'm quite confident when I say that no one will lose their job allocating to gold, silver, or copper this year, compared to those that have taken a more innovative approach and, in my opinion, a significant better asset that do the exact same job than the other ones. But you still have a lot of incentives in the traditional financial world to not take too much risk, especially in this market environment. And that happens to be that Bitcoin is a new asset class. It's innovative, even if it has outperformed all the other asset classes the last 5 to 10 years. So for me, it's clear that it's conservative capital allocating to metals and especially gold, store of value. Centralized or central banks are allocating heavily to gold. And I think silver has a little bit retail premium to it as well. So it's quite interesting to see that big asset classes like silver, $1 trillion asset class, can have this kind of volatility. And I think, which we also come back to later, that a lot of this capital will eventually rotate back into Bitcoin, especially now when they start to research scarce assets. They start to spend a lot of time figuring out what's our hedged against the dollar and what's the most efficient way for us to allocate capital. And there, I think Bitcoin will be a clear winner, but it's still lagging because of history, in my opinion.
Yeah, and I think it's important for us that works with Bitcoin every single day and are very familiar um, and know a lot of Bitcoin to remember that Bitcoin is a new asset class. Even though it's been there for a while now and it's has performed very well for the last 10, 15 years, it is a new asset class. And when we see uncertainty and fear in the markets, as you say, traditional investors will naturally seek to the assets they know and are familiar with. So I think it's 100% that Bitcoin is new for most investors, but it will eventually become a more natural part of the investment mix, to say it like that.
Yeah, and if you go back to the
Yeah.
so to silver, for example, a lot of the narratives right now is silver is a industrial critical metal, which are heavily used in solar panels, electronics, and and now when companies actively try to strategically position themselves for the new industrial revolution with everything from again solar panel data centers, eventually will be robotics, and it's also the infrastructure that power AI. The retail are very actively seeing that as a critical metal for that, and it's also true, and it's also true for copper. So I think we have to also be honest that a lot of the expectations for these market movements is also the digitalization of the world, like the data centers of the world, the energy of the world. And then it's very easy to forget that Bitcoin is backed by energy. And I think people now understand that we will very soon live in a completely different world where AI is our new brain and robotic is our new body. And therefore, we see metals, and I would say like the whole narrative goes from atoms to, sorry, from bits to atoms. Everything was about apps and making things more efficient. Now we know that we need to develop a lot of infrastructure for the new industrial revolution, which will be heavily influenced by AI and robotics. And that's a lot of the narrative behind all these price movements as well.
Very interesting. And if you look at the more concrete numbers here, as you mentioned, gold is up 70% year to date. We have seen a increase in the market cap of gold of 13 trillion. Silver is now the third largest asset in the world, which is incredible. And we have seen an increase in the silver price of 170% this year, with single days where we have seen 10% price increase in the silver price, which is incredible for an asset class like silver. And I think what this tells me is that this is not just retail-driven price movements, because it's huge pockets of capital that has been shifting their focus from more risk growth assets, equities, to more traditional anti-inflationary monetary asset classes like gold and silver. And I think this is not just retail, but it's mainly driven, in my view, from the big capital allocators as sovereign wealth funds and pension funds and so on. And I think if we move over to this graph, it's very interesting to see that for the first time since the mid 90s, the non-US central banks of the world now hold more gold than US treasuries, which also is not showing us, or it's not just showing us that the investors are moving from away from risk assets, but they're also moving away from the US dollar, which is very interesting to see. And how do you think that relates to the Bitcoin thesis, Sander?
So, U.S. Has or is the most capital or is the biggest and most efficient capital market in the world. They also control the world reserve currency, and then they in many ways has the power to issue more dollars with quantitative easing and money printing. And like I think it's fair to say that the US has been highly efficient over the last couple of decades and has been the main driver for innovation and have pushed the world in the right direction. But you also have the big pile of debt that are like stacking quite rapidly. And if you look to history, when you have a lot of geopolitical tension combined with the world reserve currency that have aggregated a lot of debt, you have a tendency to see that the other countries are losing confidence in that specific country. And I believe that is what's happening now. I think the history doesn't always repeat, but it all sometimes rhymes. And when you had UK after the Second World War, it was a lot of geopolitical tension. It was a lot of debt going around to maintain all the military infrastructure, and then US took advantage of that, and that was actually the moment in time where the US starts to build up power, and now US have had that power for close to 80 years. And if you look into history, they seem to repeat the same mistake that the most or like what UK did, and that's also true for Netherlands. That was before UK, and in many ways Spain before that. So for me, it's clear that the world are not confident in the same way. Everything can change, but the movement right now seems that they have less confidence in the US economy, especially around the debt. They start to lose interest in the debt itself, and see gold as a natural way to store their value. And to answer your question about how does that impact Bitcoin, for me, it's quite clear that if you believe in the quantitative easing world with money printing and productivity will eat up all the debt in the future, then US debt is a good investment, because they are at least for now, they are the leaders in innovation and productivity increasement. But if you now go back to gold as a store of value and a place where you want to keep your assets, I believe that it's a way better technology that exists that are way more transparent and more geopolitical and neutral, and also way easier for individuals to hold, control, and have property rights over. And that's Bitcoin. So I think all this rotation of capital increase the research on what is store of value and how will that look in the future, and what will I use as a medium of exchange if the US dollar is losing traction. And that's where Bitcoin is a very natural and, in my opinion, the only option more digital native and digital believers can allocate to.
Yeah, totally agree. And this chart is, or this graph is clear to me that it shows a shift in how investors are thinking and trying to protect their assets from inflation. And I think it's very interesting to take a look at the total US debt over the past years. And what is worth reflecting over is that this debt experiment is quite new. Like almost all the American debt are acquired or accumulated over the past 100 years. And actually, over half of all US debt are accumulated just in the past 10 years, with over 10 trillion since COVID, so in just 5 years' time. So I think it's important to have in your head that this is a quite new phenomenon, and we don't really know how this debt-driven economy will play out in the long term. And I think that makes the investment thesis for Bitcoin even stronger, in my view.
We have over this period, and in my view, after COVID, we have accelerated into digital economy, and that's a very different way of creating assets. Like if you take all that leverage into real estate, you have these physical assets, and if the market gets efficient, you can sell it for more or less the same or inflation adjusted, and you apply leverage to that, and it makes you a very good investment, which most of the real estate industry has been developed that way. So debt and leverage is used to accelerate the growth of an economy. The problem now is that we have moved over to a digital economy, and a lot of these assets doesn't necessarily follow that digital progress. And how you invest in AI and robotics is very different than how you invest into physical assets. And I think the reason why you can see the charge over the last 100 years is that US has really only been had this power for the last 80, and that was accelerated by or after the 1970s, when they removed the gold standard and took full control of the money printing in the world, and everything was measured in dollar, everything was traded in dollar. And now we see that the total debt is too high and accumulating too fast for other central banks to believe in it. And therefore, I believe Bitcoin will take a lot of this market, and a lot of the capital rotate back to Bitcoin or into Bitcoin. New money will also come into Bitcoin. And we are in this industrialization and financialization phase of Bitcoin, where we have quite a few years of history. The technology works, it's performed incredibly well. It's not hacked, it's decentralized, and no centralized power can control it. So I believe many will start to look into Bitcoin as a great alternative to protect their wealth, and but also have all the options available for how you can trade without any centralized power controlling you. Because US will not give away their world reserve currency very easily. And I think that's a lot of the reasons why we have this geopolitical conflict right now. And that's why foreign central banks are buying gold rather than treasury bills from the US, because that puts pressure on the US economy and the US government.
Very interesting. And talking about the geopoliticals and other reasons for the drivers of the gold and silver price, I think it's important to say that Bitcoin is not gold and Bitcoin is not silver. We can compare them and look at similarities, but it's important to note that there are other drivers for the gold and silver price increase we have seen this year then that wouldn't be relevant for Bitcoin. And I know you have some thoughts on this, Sander.
Yeah, it's very easy to say Bitcoin is digital gold, or it will be critical as a monetary commodity. But for me, the most important takeaway here is not if you can compare it, but you can see investor behavior. And you can see the geopolitical conflict, like China now having export restriction on silver from 1st of January 2026. For me, that's a clear signal that, hey, we believe silver is going to be a critical metal for the next industrial evolution, especially related to AI and robotics. And therefore, we want to have control over who and when we export, to be able to take control of that significant industrial component. Um, the gold trade is different. I think the gold, I think silver is a metal that is critical for the industrial evolution. And gold is more clear sign that we have less confidence in the US dollar. And therefore, you have one element of what's the most critical metal for me to win the new industrial revolution, and what's the best store of value we can use to protect ourselves against a weaker dollar and strengthen our political situation when you have this geopolitical tension. And to be honest, I don't see like interest rate cuts making this situation better. And again, we are living in a attention economy, so a lot of these narratives are formed by social media, and therefore it very quickly become retail assets when you see big green candles. It's no better marketing than a big green candle. So my takeaway here is that it's more geopolitical tension. It will probably accelerate. So most capital allocators in the world will look for alternatives and how they position themselves against this geopolitical tension, and also how they protect themselves against a weaker dollar. And that's, again, equally true for the euro. So in Europe, we are not in a better situation. But in Europe, we don't even have innovation either. So Bitcoin is the only solution for Europe because we can't outgrow inflation and all the immigration challenges we have. So we have to have a better way of protecting our wealth in Europe. So China and Russia buying more gold, for me, again, it's a clear sign that we need alternatives. And I think in a digital world, and we should not forget that we are living in a digital world. Most of the distribution, most of the communication, and most of the connections happens digital first. So it's very unlikely, in my opinion, that we will see a reverse trend on that topic. So why should money be physical like gold instead of digital, when we have seen thousands of examples that that's not the direction the world is going into? We should not forget that social media gave free speech back. They gave people and individuals and companies a platform to speak for themselves and build themselves without any centralized media stepping aside. And we are, in many ways, we are media now. And I think it's a growing demand, especially for the younger generation, to take control over their own life. They build their own brand. They are digital in most ways, and they have friends all around the world. Most young people don't care about the geopolitical tension. They just see it as a negative. So for me, with that trend, you are very likely going to see younger individuals looking for a geopolitical neutral way of transacting and storing and store value.
I think that's a really interesting way of framing it, because everything around us is digital, but not our money system. So there's kind of against the natural law to see a future where money should be physical and not digital. So yeah, I strongly believe in the future being digital money and digital credit, and why shouldn't it be like that when everything else is like that? So yeah, very good reflections. So we have now seen that silver and gold and other metals has significantly outperformed Bitcoin this year, or at least year to date. And now I want to end with an open-ended question for you, Sander. And what does this market sentiment mean for Bitcoin? And what do you think will be the main drivers for the same investors starting to shifting from gold to allocating more to Bitcoin?
So, first of all, with silver being significantly more expensive, that directly impact, and Elon Musk has stated it, like a silver price too high is actually an industrial problem, meaning there will be a higher capex for most AI and robotic companies that will produce most of the productivity in the society in the future. And that tells me that all the future cash flow analyzers have to look into different ways of allocating capital. It's a higher capex for these companies, especially if this trend accelerates. So for me, it's quite clear that capital allocators will understand that the industrial process will be more expensive. The dollar has lost, at least in the short term, trust. Therefore, we need to look into new ways and new assets to be allocated to. And I think as a store of value in a digital native world, Bitcoin will get a lot of attention. And with so much research putting into how do I allocate to more geopolitical conflicts and a weakening dollar, I think it's really just one digital asset that sticks out to be a favorite, and that's Bitcoin. I think Bitcoin is lagging, and we have to look into Bitcoin in a historical context. Bitcoin at 89,000 was quite a dream just a few years ago. And even in a bear market, typically, if this has been the bear market, we have seen Bitcoin going down 60, 70, 80%. This year is 9. So it's relatively stable compared to what it has been historically. So all this put together, for me, it's clear that the world is digital. The world needs money that you can own, that you have the property rights, and it's transparent, decentralized, and has fixed supply. Bitcoin is never hacked. It has worked, no downtime in the period. And it's also at a significant size. I mean, we should not forget that silver is 4.5 trillion, but Bitcoin is close to 2 trillion. And we very rarely see a $2 trillion asset class go away. So I believe this period we now are entering into will accelerate research on alternatives. And I think Bitcoin will be the alternative. I think global investors are now voting with their action in a quiet way against the current financial system. And I think Bitcoin has the potential with the fundamental or the fundament it has built as a great store of value. It's very natural that you can build global geopolitical neutral capital markets on top. And that will be good for countries, because countries that accept this innovation and new industry will attract talents, they will attract companies, they will build new industries that will be critical in the digital industrial world. Those that don't, they will slowly die or struggle for a long period of time to the next opportunity comes up. And when that starts to be clear as a narrative for the big capital in the world, I think even as partial rotation can change everything when it comes to market size and also usability and use cases for Bitcoin. So it will be important for countries to adapt this. It will be important to companies like H100 that are in the middle of the capital markets, giving alternatives to investors. And as always, and as the core fundament of Bitcoin, it's very important for individuals to own their own money, have the option to self-custody and have property rights over their assets. If you have to leave your country, if you have to move money, if so, for me, this narrative makes me very, very bullish on Bitcoin in 2026. I don't believe that money will go back to physical when the whole world has gone digital. Most of what's happening in the world now happens digital first and then physical world later. So for me, it's seems to be a boomer hedge to go against gold and allocate to gold rather than adapting the new world for the new generation, for the new industry, which are Bitcoin.
I think that's a very positive way to end the year and end episode 4 of Huddle. So then we just want to wish everyone a good New Year celebration and a happy New Year, and we see you in the next episode.
Happy New Year.